What's up, guys? I made $12,000 today swing trading in the stock market, and I want to show you exactly how I was able to do this, which trades I took, and why I took those entries, as well as knowing what to do when the market gaps up, because a lot of swing traders have an issue with markets gapping up and how to manage their trades or even get into new positions once the market gaps up. So hopefully you enjoy this video, hopefully you learn something from this, and hopefully you're able to execute on similar trades and make a ton of money in the markets. Let's go. All right, guys. So as swing traders, the main thing that you want to look for right off the bat is to see the indexes of the market, meaning how the market is actually moving. I like to use QQQ because I mainly trade tech stocks, but you should also look at the S&P, ARK, IWM, and so forth, depending on what sector you're kind of focusing on for your swing trades. Now, the most important thing is understanding when the markets have momentum and when they start consolidating. What a lot of traders miss is they'll end up making, let's say, a lot of money when the markets are going up, but then when the market starts to chop and go sideways like this, they'll lose a ton of their gains because they don't size down and they don't manage the risk correctly. Your goal as a swing trader is to try to capture these really strong moves in the market, but understand the fact that sometimes the market will not be conducive to swing trading and making a ton of gains. The markets will have to go sideways. They can't just go up forever. And there'll be like these periods of time when the market will go sideways. And this is when I'm going to personally like to reduce my risks. So overall, over the last week, I literally only took 2 trades because of the fact that we were within this range. So even though we kind of slowly grinded up, a lot of the moves were very choppy. So one day was down right here, then one day up, then one day down, up, and then it's just kind of sideways, and you can't get a lot of kind of constructiveness on your trades. So what I look for is if I notice that a lot of my stocks are not making new highs, and if I notice that the market is slowing down and a lot of the leading names are kind of pulling in, that is going to be a sign for me to step back a little bit and reduce my size until the next breakout comes. And that is how I trade the market, and that is how I get a lot of my size on and aggressive when the market starts to break out. So for example, on Friday here, you could see QQQ started to break out, and this is where I really put on a lot of my positions. So I didn't really enter many trades today, but I entered a ton of trades on Friday because the market was breaking out of its range and it was telling us, okay, now it's time for the next leg up. Now, obviously, of course, this could be a failed breakout, but that's the risk we're willing to take, right? To be able to catch the momentum. So for example, same thing happened here. On this breakout right here, we had the break and then we had the nice momentum move higher. And this is when you want to be trading in the markets, because when there's a lot of momentum on the indices, there's going to be a ton of momentum on individual stocks. So let's look at some of the stocks that are personally traded and also how to not be scared of gap ups and how to trade these whenever they do come. So for example, the first trade that I took was on the ticker path. Now, the setup that I was looking at for this one was it was setting up in a big daily wedge flag right off the 21 EMA. Volume was declining, so it's the exact setup I teach and look for. High volume breakout right here. This one also has a deal with OpenAI, and it has a deal with NVIDIA, which are some of the best companies in artificial intelligence, which obviously helps a ton. And then as always, you also want to check out the weekly. What is the weekly doing on this thing? Well, it's breaking out of a massive weekly base, which tells us it has momentum on basically all time frames, so the monthly and weekly, and it just actually retested that breakout. So you could see it had a massive move higher right here, retested the breakout, held perfectly, and this is when it started to pique my interest. So I ended up finding this one off of my scanner that I use, and tested perfectly right at the retest right here. And then on the daily time frame, you could see it started to set up in this wedge. Now, unlike all the other stocks on Friday, this one actually didn't gap up a ton. It actually opened right under the previous day's high. So if I mark out the previous day's high, which would be right here, you can see at the top of the wick, it actually opened right under. So that was my trigger. That's what I was using to take the trade. The reason why is because you can see this is a clear level of resistance right here. It's got a clear trend line. And then if you can combine that with a horizontal level, this was an inside day. So you know the high is obviously a key spot. And also we had the 8 EMA reclaim potential, right, which happened here as well. Now, if you can combine a few different kind of key areas for your trigger points, that is going to make your trigger points absolutely bulletproof. And whenever you get in, usually the stock will move away from that level and make a nice move up. So the most important thing is I like to start with finding a daily setup on obviously the daily chart. There must be some constructiveness to the setup. And then second, needs to be in a super strong theme and sector, right? So obviously here we have an AI stock, And then also it needs to have, a clear level that you can enter. And that's the clear level that I chose right there. Once you have that, it all comes down to just executing the system. So what I was looking at for this was the lower time frames. So I always go down to the lower time frames to get my entry. The reason why is because the lower time frames allows us to basically snipe an entry with very low risk, because we don't have to wait until the end of the day to, enter all the way up here. We can enter down here, get some cushion on the position, and then end up holding this one. So what I was looking at for this trade was, this was obviously the trigger, the previous day's high. It broke above that level right here on this candle. And a lot of traders will enter before noticing volume. The most important thing to me is that volume is high. So you can see right here, for example, you had super high volume. So what I like to use is this volume average cloud. Whenever the volume is above the cloud, it is above average. So if I see that when a stock is breaking out, that is going to be my entry. So for example, if the volume is below the cloud, like it was right there, then I'm not going to be taking an entry. Or if it's below the cloud, like it is right here, for example, I'm not going to be taking an entry. But when the volume is above the cloud, like so, and the stock is breaking out, that is going to be my entry right there. So I jump in right away as it breaks that level and I start seeing volume. And then my stop loss right off the bat goes to the low of the day. That is a stop loss that I use. The reason why is because when you're trading breakouts, a lot of times, if the stock breaks your low of day, it's probably going to fail the breakout, right? And we want to be able to exit the stock before the breakout really starts failing and then moving the other way and just completely gives us a massive loss. The whole point of what we are trying to do is get very low risk to reward, meaning we have very low risk and high reward. So obviously that'd be a high risk to reward ratio. And we're trying to be able to get in these positions with some size and then be able to swing them as long as they hold the key moving averages. So for this example, the trade that I took on this with the long position tool, you could see you have the stop loss at the low, and this ended up being a pretty good risk reward of 4.2, right? Which is pretty good. And the trade isn't even over yet, right? I'm still in this position because at the end of the day, remember, we are swing trading, right? So we're not going to be closing our full position just because the stock is moving up. You have to use a solid exit strategy. So the exit strategy that I use is I trim some of the stock into a key resistance level. So this was kind of like my first trim right here, which was 100% on the stock. And then obviously on the option that I'm trading. And then my next trim would be somewhere up in the highs up here. And then most of the position from there is just trailed using the moving averages. So as long as the stock doesn't break below the moving averages, I'm continuing to hold it because I have such a good average from buying down here that I could just continue to hold it as long as it, continues to make new highs and continues to hold the moving averages, which kind of give us the trend of the stock. So that was the trade there that I took on Path. This one had a very nice day today as well. I grabbed it on Friday. I was up a lot of it on Friday, and then today it followed through really well, which is great to see. The second setup that I took was on the ticker LRCX, and this is something that I want to explain to you to kind of tell you how to handle gap ups in the market. So a lot of people will say, what happens if a stock gaps up? What do you do then? Well, what you want to do is make sure that there's still a daily setup, right? So the daily setup on this ticker was this big kind of flag right here. It broke out of this level right there as well, and then it opened up on Friday, right? So what am I looking at for this? Well, first of all, I'm going down to the lower time frames. You don't just want to just buy it right away as it's breaking, above the level at the open because it's gapping up. So we don't know if it's going to hold. What I like to do is wait 30 minutes, and this is called a 30-minute opening range break. So if a stock goes sideways for 30 minutes and it sets up, it goes sideways, usually after it breaks out, either the high or the low, that is where the momentum is going to continue to kind of come in and pull the stock higher. So there still must be a setup on the daily, but if you missed the breakout or if there's a gap up and you can't catch it, wait the first 30 minutes and see what the stock does. So if you go down to the 30-minute time frame, you can see this candle is obviously pretty thin. You can mark out the high, you can mark out the low, and then boom, right when the stock starts to break over the high and you start seeing volume coming in like it did right here, this is going to be your entry, and then your stop loss goes to the low of the day. You don't have to risk the whole gap. The stop can just go to the low of the day, and you can have a very good risk to reward. So on this one, I bought it right here. Stop loss went to the low of the day. And again, I'm swinging it as long as my stop loss holds. Today, you can see it gaps up about 4%. And I make about 100% on this trade, obviously using options, which was a super, super nice trade. And again, I don't have to sell the whole position. I'm trimming some into my first target, and then the rest of the position I'm holding as long as it holds above my average price, right? So I move my stop up to break even now, and I continue to hold the rest of the position. The last trade that I took on the day was on the ticker Tesla. This one was a little bit more shaky. I think it's still slightly in profit, but it hasn't really just played out yet, right? And this is the whole point of, swing trading. Stocks can take time to play out. the move doesn't only happen in one day. For example, this is another trade that I took on Tesla right here, which had a massive breakout, and one day I had a nice move, but then look, 2, 3, 4, 5, 6, 7 days, and it makes an absolutely monster move, right? So sometimes stocks take days to move, and sometimes they'll need a little bit more time. So what I took on this one was it was setting up in a massive daily base, like so. This one was a little bit more choppy, but I had a clear level of resistance here at 450. And then again, on the lower time frames, when it started to break over 450 and I started seeing volume, I bought it right here. At one point, I was up about 25-30%. But again, if it doesn't hit the target, I'm not going to be trimming. The reason why is because then I'm going to have terrible risk to reward moving forward, right? A lot of people sell their stocks too early. They sell their stocks before they hit their targets just because they think that, base hits actually, make them money over the long run. But the issue is you're going to have asymmetrical risk to reward, and it's not going to be on your favor. You want to make sure that you're risking a small amount of money to make a big amount of money. That's the whole point of this trading strategy, using momentum and being able to swing and hold things for a long period of time, is you want to have targets that actually make sense. You don't want to be trading something for 20% gain and then your losers are 50%. That doesn't make sense. You're going to have an incredibly high win rate. So using the strategy, right, I'm making sure that I'm holding for at least long enough to have a good risk to reward. For this trade specifically, my target was up here at 470. So I'm not selling until we get there. And if it stops me out, it stops me out, right? My stop loss is going to be low of day. So I'm either getting stopped out or I'm hitting my target. In between does not matter. Too many traders get caught up in the in between. They stay on the 5-minute, 1-minute time frame, and they kind of deliberate every little move, and they, kind of ask themselves like, oh, what should I be doing here on these little, ticks? This is all just kind of meant to make you emotional. If you stay on the bigger time frames, and obviously use the lower time frames for your entries, but after entering, stay on the bigger time frames, it's going to make you much less emotional, and you're going to be able to just trade whatever is in front of you. So I hope you found this recap valuable. It was a massive day in the markets. There's going to be a ton of very good opportunities in the next few weeks as well. Hope you can all catch them, and I'll see you guys on the next video.